I am putting this into the bonus feed because I want to honor my guest time, and there's a lot of this that is still relevant. But when this was recorded versus now, when I'm posting it, things seem different. So we're going to have Douglas back on the main show on Saturday to talk about a lot of this. Robinhood and Citadel, and they all seem to be in cahoots, and there may be some more nefarious stuff happening than we first thought. So take that with a grain of salt. Just wanted to let you know, but check it out, and I hope you learn a little bit of something, and please forgive the redundancy on Saturday when we do this all over again. You're listening to the We Are Libertarians podcast network. Find all of our shows at wearelibertarians.com. Thank you for joining us today here on the Chris Spangle Show. My name is Chris Spangle here on the We Are Libertarians podcast network. If you're enjoying the shows, then please make sure that you share it with your friends and family. That is the number one way we grow. Don't know if you heard the announcement, but Facebook is going to start removing all politics, from its platform. So it's just incredibly important to use those networks to push people towards things like the podcast feed while you still can. We need to have you help do that. And make sure you support us at Wall Plus. Join wallplus.com. WAL, as in We Are Libertarians. And today we are talking about GameStop. And my longtime Facebook friend, Douglass Gaking, messaged me and said, hey, I'm an expert in this. Now, I'm going to trust him on that. But you listen to Reddit, so why not Douglas? And we're going to talk about what exactly is this whole GameStop thing. And Douglas, first, why don't you tell people who you are, what your credentials are, and why should people listen to you over, Bloviator65 on Reddit?
Oh, I don't know if I could compete in expertise with these Reddit accounts, but I can try. So I'm a high school teacher here in Indiana, and I teach a couple business classes. I have an MBA with a concentration in economics. And I've been following stock market for years, doing some writing about different stocks. One of the stocks that I've written some analysis about is GameStop. So I have a little bit of background, particularly with that company.
Okay, so what is happening? Why are we talking about GameStop? I thought aren't they out of business or something? Like what? I mean, what's going on?
Well, the narrative for several years here has been that GameStop is Blockbuster 2.0, and it's going to go bankrupt any second now. And I wrote an article a couple years ago about that, not really being true. There's just not enough evidence there to support that claim for a lot of reasons. But that narrative has been pushed really hard, kind of ironically, by a lot of people in social media and a little bit in financial journalism who have been trying to push down the stock price of GameStop for a long time now. And they've been pretty successful at it. For a long time, they've been pushing that stock price down from it was around $25 or so down to around $5 or so. So they did that over a span of maybe two years.
Wow. Okay. So why does somebody unfairly attack a company like that? And maybe we should explain the concept of shorts first, because I think that's going to play a big role in our conversation today.
Yeah. So with short selling, what some investors are doing, and hedge funds are notorious for doing this, is they're betting that a stock is going to go down. And they can do that by essentially borrowing shares at one price, and then when the price goes down, they buy them back. And they have to buy them back at the end of that contract period. And that plays an important role in what's happening right now with the short squeeze that's happening with these stocks. And there's a role that in the market for this that's good. And that's an important thing to note, that there is a role in the market for shorting stocks. It's something that's been going on for over 100 years. And it plays a role in price discovery. It plays a role in holding companies accountable when they are not doing things right. There was a good story a couple years ago where Bill Ackman was shorting Herbalife because it's ripping people off. And so he felt like the company's business model just was not sustainable with the way it's structured and the fact that it is ripping all these people off, and that they were probably doing things that were illegal. And nobody was holding them accountable. So he tried to do that through his short position and through the research. He put the resources of his hedge fund into that. So there are definitely good things that short positions do. And the case to short GameStop, there was a case, I think, for that argument. When you have a company that's cash flows are starting to deteriorate like GameStop's have been, you have the risk that it's going to start affecting the balance sheet. The balance sheet will start deteriorating. They'll be selling off assets to try to keep up with liabilities, and eventually it could end up going bankrupt. And that was the worry with GameStop. So I'm not saying that nobody should have been short in GameStop. I think there was a case for that, but they were trying to push it down very far, and I felt like the fundamentals just didn't justify how low the price was for a long time.
I've seen a couple people say that, well, they were trying to bankrupt GameStop with their short selling. That's not necessarily the case, is it?
No, that's not really how stocks work. There was also a great headline from Babylon Bee about how GameStop's going to use all this extra money to start offering people more than 25 cents for a video game.
Right.
Which is hilarious, but it's not how stocks work. Because really what we're talking about is just shares of ownership in this company. And if the shares of ownership are worth more based on what other people are paying for it, it doesn't affect the company itself. It just affects how much people can sell the shares for.
Right. So the profitability and the stability of a company isn't necessarily tied to its share price.
No. So this really has almost no effect on it, other than the only real way that share price could affect that is if it makes the shareholders change their behavior and decide to vote differently on who's on the board. So if the stock price has been hit hard for a long time and it's been pushed down, shareholders could get frustrated with the board, and then they could just decide to vote out the board members because they want the company to go a new direction. That's really the only way that a stock price actually affects a company's behavior or situation.
Okay, so how did this get started? I've heard Elon Musk was involved. I've heard that it was about punishing some hedge funds. What's the real story in all this? I mean, obviously the main conventional wisdom is that this is all Reddit. That Reddit has banded together in this one subreddit, and if you don't know what Reddit is, it's a social network where people can log on and get into a subreddit, and that community then takes on a life of its own. And so is this all Reddit? How did this get started? How does Elon Musk figure in? Tell us the origins of all this.
I have not got put together the full timeline on who did what at exactly what point. I know GameStop was starting to see some significant price increase in the fall. And after being held down for quite a while. And it seems like Reddit played a role in motivating, some people to start buying more shares to kind of help that along. Every time short squeezes like this have happened, it's kind of a mix of factors coming together. There are people who want to get to hurt the people who are shorting the stock and get the price to go back up to where they think it should be. There are also just natural factors that raise prices. My favorite part of stories like this with a short squeeze is the feedback loop thing that happens too. Once it gets rolling and the stock price is going up, if people with short positions, if their contracts are expiring, they're forced to buy regardless of what the price is at the end of that contract. So at that point, if the stock price has gone up, no matter how high it's gone, they still have to sell.
So let's break that down too, because
it pushes the price up even more.
Yeah, so it's always kind of confused me a little bit. So let's say the stock price is at 4, or let's say it's at 10, right? All right, and you buy a contract saying, I think that this is going to be $4 in 1 month, and that it's going to drop that low, and then I'm going to buy at 4. But in this case, it's 425 instead of 4, and that's where so they're forced to buy. So how does that make them? What? How do you make money on it? All right, we're at 10, and I'm going to buy at 4 because the price is going to go down. Because
you sold at 10, so and you borrowed it and sold it at 10. So when it goes down, you buy it back at 4, and you've got a $6 difference there that you made, and then you just return what you borrowed, and there's a small fee involved.
Gotcha. Okay.
Yeah. So
you return what you borrowed when you sold it, and then you make your money back. But when the price goes from $10 to $425, now you've got a problem.
Yeah, and your potential losses are almost infinite here. And as some hedge funds have learned recently, I think it was Melvin Capital Management. They lost about $4 billion on this.
Right.
And it was bad enough that they've had to, liquidate assets, sell some stocks, and they actually needed a bailout. So some other hedge funds came in and invested only a couple million, but invested some money into their hedge fund to help them get out of this mess.
Right.
Because you really can lose almost an infinite amount of money as high as that stock price goes if this happens. Everybody who's shorting shares should know that. There shouldn't be a lot of people out there shorting shares who don't know what they're doing just because of the amount of money involved. Shorting stocks is not something that would be easy for like the average Joe to do.
I barely understand it, and I don't understand the stock market at all. So, like, I'm hanging on by a thread with you, on this stuff. So it's like, so you hear that these people lost all this money, and then you sort of go, well, I'm not gonna get in the short game because I think that's what caused the 28 crash, and I don't want to, I don't want to be a part of that. So they bought, basically they just had to purchase a crazy amount of shares at a really high price. Is that basically what happened to Merlin Capital?
Yeah.
Okay. And how does Reddit play into that? Because I've seen some things where it wasn't necessarily Reddit. It was people on Reddit going on Robinhood, which is an investing app, or you can go on Stash, which is what I use, and buy shares or fractions of a share. And so people were going on and buying shares of GameStop to ride the price up. Sort of that, you see that in Bitcoin a lot of times, where somebody will buy, it's at 31, but it's going to go to 37. They get to 37, they sell, and then it drops back to 31, and they buy again. Some might call that speculation. But I've seen on Twitter some folks say that some of these hedge funds have access to the Robinhood data, and so they use their AI to buy milliseconds before the Robinhood orders are placed. And so those AI machines drive the price up even more. And so it's not really Reddit. It's the street basically punishing other members of the street for their own financial gain. Am I correct in that? Have you seen something along those lines?
That makes a lot of sense to me. I've seen a little bit about that, but I haven't gotten into detail about it. But from everything I've read over the years, that makes a lot of sense that's probably what's happening. And the Redditors are just an easy group of people to blame. I just saw a CNN editorial yesterday comparing this to Trump and how this is because of Trump's America that this is happening, which is just
okay,
ludicrous. So I think they're kind of become the boogeyman. They could affect us a little bit. GameStop and a lot of these other companies have a small market capitalization, so any new volume that's going into them could affect them more than if you wouldn't be able to do this with like Amazon or something like that with retail investors. There's just not enough money to drive up the price that much. But a small cap company like GameStop, you could do that. But you can only do so much. So they may have pushed it up a couple percent, but most of this is probably hedge funds. And who knows, some of those hedge funds may have been involved in putting this stuff on Reddit in the first place. We don't know that. We don't know who's behind every one of these accounts. They're anonymous, or for the mostly anonymous.
Yeah, I see all the anti-Redditor stuff in the media, and I guess I don't see a fundamental difference between a financially interested person going on Reddit and making an anonymous comment, or just regular Joe American making that comment in the Reddit thread. Let's all buy AMC or entertainment, or versus a guy with a tremendous amount of financial stake going on CNBC and affecting the market on Fox Business or CNBC. Like, to me, I don't think there's any difference, but I don't get the scorn for Reddit and the average person and their greed versus the greed of the guy on CNBC in the suit and tie.
I think some people in the media are just annoyed with the entire situation. And so it's just really easy to go, oh my God, this is a bunch of idiots wasting my time. So I think it's easy to just make that the story because they're just annoyed. They're like, why do I have to research shorting stocks? And why am I looking at this ridiculous company? So I think some of it is just that, how ridiculous this thing appears.
There's a general annoyance with people having fun on the internet, is there not?
Isn't that the truth?
I just feel like I look at a lot of this and I go, all right, well, the people that I see in our Facebook groups and on our social media talking about this and in our group chats, it's like they're having fun. They put $20 in, $100. Maybe they're going to make $200. Maybe they'll make $40. You know what I mean? Like
maybe they'll lose it all.
Maybe they'll lose it all.
Quite possible.
But it's $20, right? Like, you know, I don't see people investing their 401k in GameStop because no rational person is going to do that. They're just having fun. And then the fun police come in and kill it off. And Robinhood announced today that you can't trade all kinds of different stocks that are involved in this, like COS and AMC and GameStop itself. So,
yeah, I saw that. I don't know if that was just pre-market or if that's continued into the market open or not. They may have just done that during pre-market. But yeah, you're absolutely right. The fun police are coming in. And to add on to about the influence of the Redditors, I will say that I've seen on like my Facebook account, for example, people who have never talked about stocks before, people who didn't even have brokerage accounts, opening accounts and throwing a couple $100 in this because of the hype that's been pushed that spread from Reddit to other social media. But a lot of that didn't come until after the hedge funds started getting hurt. I didn't start seeing those messages pop up until after I saw, you know, Melvin Capital and I forget what Citron, I think, was one of the other ones that was complaining about losses. After the hedge funds started complaining, that's when it really started spreading. So even that might not be entirely from the Redditors. It may be from just people seeing, oh, this actually works. Okay, I'm getting in on this.
Yeah, it's journalists
throw $100 in.
Yeah, it's journalists seeing on their feed people talking about it, so it looks bigger than it is when the people may not have the sophistication that you bear in all this, you know, where they look at it and go, all right, well, this is a bunch of streeters fighting with other streeters, and your regular average person is probably, I mean, that really is fundamentally, like, no joke, the people who are really going to get hurt in this are the people that did make, now it's personal choice, right? It's their decision. Make a bad financial bet and buying in at GameStop at 100, can't sell in time, and then it's going to be $4 in 3 days. You know, like, they're the unwitting, I mean, sort of the useful idiots of you know, professionals fighting with each other. And I think that's the thing that we ought to keep in mind is, like, that, and that may be where journalists are coming from. Like, hey, regular people are going to get hurt, even though it's their choice, like, because they don't have the understanding of who's fighting here and what's going on. Is that a fair assessment?
Yeah, that may be where a lot of them are coming from. And that is something that I worry about. I was kind of telling one of my friends on Facebook, yeah, have fun with this. But then after you're done, you know, get into investing the real way, you know, get into like some value stocks or something like that. And a long investing game where you're actually just compounding annual returns for the rest of your life, because that's actually going to build wealth for you. Whereas this is no different than putting $100 in your FanDuel account and betting on a game. I mean, that's essentially what you're doing if you're trying to get in on this right now.
Yeah, it's playing the lottery. So let's talk about that. I mean, what tips do you have if people want to get in on the stock market? I mean, my 401k is up 30%. You know, things are going great in the markets, it seems like. Like, if somebody wants to start, what do you recommend?
The easiest thing to do that I recommend to everybody at the bare minimum is just get into index funds. Open an IRA or a Roth IRA, and you can just start putting money in there into like an S&P 500 index fund or something like that, and an ETF, where you don't have to do any work, you don't have to do any research, and you're just in the market. And the market tends to go up over time. You'll probably double your money about every 12 years or so. It's pretty awesome.
I should say
that's the bare minimum. At least do that.
Yeah, these are Douglas's opinions, not the opinions of his employer, myself, or anyone else. Just for our legal protection. Yeah, I think that's smart. Like, the index funds, meaning you buy a fund that is tied to the performance of the Dow Industrial or NASDAQ, you know, or I use Stash, like I said, and they have, move with the market funds and all these ETFs, an exchange traded fund.
Mm-hmm.
And that seems to be much more of an investment than what I do with Bitcoin, where I lose too much money, right? Like, Bitcoin's hot. It's at 36. It's going to go to 40, and then it goes to 32. And then I've paid
that's just speculating. That's not really investing.
Right. You've paid $2 in fees, and you're just being dumb. It's dumb money.
Yeah. And so if you don't want to put a lot of time and thought into it, the index funds are so great for that. You'll do really well for the most part. And just something simple like an S&P 500 index fund. I mean, you're just talking top 500 companies in the U.S. You indirectly own them all, and they make money, you make money, and they tend to make money. And then if you wanted to get more in depth, you can research specific stocks and try to figure out what you think they should be worth and try to invest that way. And that's what I do. But that takes a lot of time and a lot of trial and error. And I always recommend to people with that you don't do it with real money right at the beginning. You do a paper trading account, and then you do it with small amounts of money, and then you can gradually build so that when you make dumb mistakes like I did buying GameStop at like 25 and then watching it go down to about 5, and then finally selling it when it's back up to 17 before it goes to 400. Right. Then you learn from those mistakes with small amounts of money, and you're like, okay, I lost $80 or something like that. So it's not a big deal.
You mentioned a paper trading account. What does that mean? So
that's where you're just trading fake money, essentially.
Gotcha.
Like, okay, there's $10,000 of imaginary money. It's the fantasy baseball of investing, and you can try and I'm going to buy so many shares of Apple, and I'm going to buy so many shares of this, and then I'm going to sell that here, and then you can learn from your mistakes and figure out where you screw up before you start doing it with real money.
Yeah. All right. So final thoughts on this. I mean, should the government get involved in protecting people and their quote unquote investments or stopping speculation? I mean, should people engage in any of this? I mean, what are your thoughts on some of that?
I think most of the people who are involved in this right now on either side of it understand that there's a lot of risk involved. Like most of the comments I've seen are people know that, all right, I'm going to throw $100 in here, and I don't care if I lose $100 if it helps some hedge fund lose $1 billion. They think that's hilarious, so it's worth it for their entertainment. So I don't see a lot of people doing things right now that are going to harm themselves without being okay with that and understanding that. I don't see a lot of fraud type behavior going on. It's kind of silly behavior, but nothing that appears to be illegal right now. So I really don't think the government should be taking any role in this. But I do think the government might already be indirectly taking a role in it, just from what I've seen. Like we've seen some trading halted this morning we've seen trading halted from the stock exchanges. We've seen some trading halted from the brokerage firms like Robinhood this morning. It's hard to say if those companies are making those choices on their own, or if the Fed is twisting their arm and saying, look, you need to settle this down. We're worried about financial stability of the market. That's been a long time priority of the Fed. So I wouldn't be surprised if some of those things are already happening. And I would pay attention to what happens with Janet Yellen. She was just nominated for Secretary of Treasury. Financial stability was a huge priority for her when she was at the Fed as a Fed chair. It was something she talked about in almost every Fed speech. And so, and this is starting to get people's attention when it comes to financial stability. I do not think this is actually a real threat to financial stability, though. Some people do, but I don't see that because hedge funds only hold about 3% of the market anyway.
Yeah, so I just finished reading a book called The Day the Bubble Burst about the crash in 28 or was it 29? Didn't retain much of the book apparently. But, in that book, they talked a lot about the speculation and people just, now obviously it was different then. Like, one of the characters on the book built this steamship and, on the day of the crash, everybody's trying to sell and they're 2 hours behind. And so, people in Wisconsin, unless you were, had a high-end ticker tape machine, didn't have that real-time information like you do on a Robinhood or a Stash. I mean, Is the Robinhood phenomenon and the regular person getting involved in some of this analogous to that? And that is a growing concern for people, or is it, like you said, just such a small amount of what actually happens that it's not the same concern as back then?
So I think it is analogous to it. I think this is a very bubble-like behavior as you see more people pile into it, like we're seeing happen on social media right now. So I do think it is, and it's kind of funny. I gave my students an assignment today where they're reading about tulip mania, which was a bubble that happened in the 1600s. So they're reading about that, and we're going to talk about how that relates to what's happening with GameStop tomorrow. But bubbles like that happen all the time, and they don't necessarily affect the entire market. Bitcoin was in very, very bubble-like behavior, and cryptocurrency in general a couple years ago. And that bubble, it looked like it kind of popped. And that didn't affect the overall market. The rest of the market basically shrugged at that. And we've seen other bubbles in areas of the market and without affecting everything else. So I don't think that a bubble necessarily has to affect the overall market. If it's not going to affect the overall economy, we're not talking about the housing bubble or the dot-com bubble where major parts of the economy were very closely tied to that. That's just not the case with this.
All right, Douglass Gaking, thank you so much. If people want to follow you, where can they do that?
My Twitter account is at Gaking Music, Gaking Music. That's probably the easiest way to follow what I'm doing right now because I'm kind of in between blogs and websites and various things. So that might be the easiest way to follow me for now.
All right. Thank you so much for joining me.
Yeah, thanks.
Thanks for listening to The Chris Spangle Show. We appreciate you being here, and we'll see you tomorrow.